Hello from Chicago. Alan Knuckman here at the CME Group, high above the trading floor, talking energy with the focus on crude oil. Finally 65, closing today at 65.75, which is up $1.25, essentially on session highs, squeezing the markets there, making new 3-year highs on heavy volume. So we have crude up 2% here, now at 3-year highs, back to the 2014 November breakdown. If you remember, that's when OPEC met Thanksgiving of 2014 and said they weren't going to do anything to cut production, and boom, the market fell and went down from about $65, $75 down to $26 over the ensuing months and ensuing year. So we've come back fully to that breakdown point, and we've had this healthy rally. We've been talking about 65 as the objective from the $45 to $55 range that we traded in for a full year. That $10 range on top of that 55 breakout, target 65 finally got there. It's been 2 weeks since those highs at 64.50 that were very close. The story of today is the down dollar. So the Treasury chief today was caught on record saying that the weaker dollar is good for trade. It is. That's not a secret, but usually you see a tough talk out of Washington, and that breaks with 2 decades of precedent of talking the dollar up. So we saw the dollar unwind actually below 90, below 89, pushing the euro currency up to 124 and a half, so closing in on the 125 level. Now that's a positive for a lot of markets, a lot of commodities. So we saw gold surge up $20, crude up 2% here today, stocks surged, and natural gas, something we haven't talked about in the energy complex for a while, made new 1-month highs. So keep an eye on natural gas. Also in the news was the inventory fall. Now, this is after the surprise build that we saw in the API number yesterday, where they had a build of 5 million barrels, where they were looking for a decline. Well, today we came out with some more agreeable news, I guess, that the market wanted to see. Now, this makes it 10 consecutive drawdowns for the EIA numbers. So that's a positive for the price. We saw a drawdown of 1 million barrels. Again, that's 10 straight weeks of inventory decline. So that gives us back to the technicals. We've been trading between looking for that target at 65. Now that we're through that, the next upside objective is 70, which is the halfway pivot point from the 114 leg down to $26 that we've seen over the last couple of years. So let's look at 70 next on the upside target list. Also, just a little FYI, Exxon made new 52-week highs today. So the oil sector is starting to surge, and that's the latest catalyst for stocks. So a new day, a new crude high. It had taken 14 days, or about 2 weeks anyways, since that last peak, but finally we're back up to this high once again, closing strong, 3-year high 64.75 in the March crude contract.